Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about the Amzy payout. Quick side note here. I just hit 2,100 subscribers, so thank you for everyone who's subscribing. But as you all know on this channel, or some of you who don't know on this channel, but I borrow money and I borrow that money to put into income investments. And what the strategy looks like is something like this. So I have been accruing 8 years worth of money and have been investing in the market for 8 years. And I've been investing in these foundational holdings. So over the last 8 years, I've been investing in the QQQ, S&P 500. I've invested in like SCHD and all these different types of ETFs. And eventually I switched over to single stocks. But over the last 8 years, I've been accumulating money into foundational holdings. And since now I have a decent war chest, I borrow against that into income funds. What that looks like is, I invest in the S&P 500 and Tesla. I have about $203,000, but I invest in income investments. These income investments predominantly are covered call funds, and I have about $60,000 borrowed into these covered call funds. So the investment I invest in is called AMZY, which is the yield max Amazon, like advanced income, whatever they call it. And so on October 25th, they paid me $1,068.48. Between having $30,000 of margin in this position and $30,000 in my TSLY position, the expenses has cost me $147.17. The taxes on that is $320.54. However, I was just thumbing through the different documents they have in the bottom here. And if you go to the document, it says supplemental tax information. They don't have one for AMZY yet, but they have one for Tesla, or the tsly one, and it was indicating that the 91% of the fund. Oh wait, it wasn't this one. It was this one. And this was indicating that 91% of the fund is return of capital. So for example, if you made $10,000 in profit from the income or whatnot, you're only going to really get taxed on 8.5%. So that's what it seems here, or that's what it indicates over here. And you're going to be taxed on 8.5%. So I am conservative, just setting aside 30% in taxes to pay the tax man. I don't want to be in a position where I don't have any money to pay taxes. I'm just stacking that money on the side as well. And then finally here, I am just setting whatever is, so minus this money, minus expenses and taxes, I'm left with $600.77. This is a very interesting phenomenon because I had to do absolutely nothing to make this $600. For me, if I pick up an overtime shift, that is about what $600 would pay me. So I didn't even have to go into work and I got paid $600 for this. I believe on my last video, I mentioned something that I'm not going to be reinvesting my money into here. I did a bunch of calculations that if you reinvest back 25% of your money back into the funds, you will have a portfolio that grows as well as an income stream that grows. However, I believe right now it is a much better idea to start holding some cash. The main reason that I'm holding cash is the S&P 500 is hitting all-time highs. I mean, we have been blasting up all year. So since September 29, 2023, we have just been on a straight uptrend. And to some point, there has to be some sort of consolidation. The PE ratios are starting to get real frothy. And, I wouldn't mind if to see a correction come back down to whatever this is, 474, and then to go back up because earnings are coming out and earnings are looking pretty good. However, the valuations are getting way too frothy and the companies aren't worth 20, 28, 29 PE ratios nowadays. All right, but continuing on for the strategy. And then, with this strategy of building a side stream of passive income, this is to build like an income engine to the portfolio. So I want to be able to outsource all my W-2 income to these covered call funds, as well as other strategies where I'm doing 0-day to expiration options now. And I'm also selling covered calls in my Tesla positions. And then obviously here we have derivatives to assets. So at some point I want to take that income from this free money that I use. I borrowed the $60,000. I'm going to have my $60,000 paid off the next couple of years. And then anything from that point on is just free money. And then I could use that to put into assets. And then, we're borrowing other people's money, and to get ahead, you do have to take some risk. Doing nothing is also a risk. So that's something you have to think about. And then, if this is working out pretty well, then we're going to continually scale this strategy in very incremental ways in a very safe manner. We don't want to put ourselves in a position where we'd be margin called. And finally, with this income, we want to invest in income funds that maintain NAV, probably funds that don't pay out as much, but they maintain their NAV a little bit better. But that's something that will come across when we get to that point down the road. All right, so let's talk about my portfolio. So I like to show exactly what I'm doing. I've spent 8 years building this portfolio, so I racked up many thousands of dollars, many hours of overtime shifts to get to this position where I'm at now. This isn't some money that I just had handed to me. I worked 16, 20 hour shifts, 50, 60, 70, 80 hours a week to get to this point. So my total portfolio value is $203,277.69. We're going to discuss the metrics that I like to track on this channel. So here we have I like to track the margin status, where we have a low risk. So I have about $137,264.33 of room before I can get margin call. I have a low risk, and we'll talk about that here in the next second. Let's actually see the distribution. So this is my Amzy position. I have 1,400 shares here. It makes up about 8.65% of my portfolio. My cost basis is $22.18, and the market value is $26,208. The amount of money that I used for the initial purchase was $30,000. So you can see we are definitely, from a price appreciation standpoint, we are in the negative, but I'll show you how it's combated through the income from the distributions. Carrying on over here. So again, margin maintenance here is 25%. It's a pretty stable stock. So, for every $1 I buy, it's a 25% margin maintenance. And you can see here, this is the dividend. So it's 12 hours ago, $1,068.48. Because I own 1,400 shares, that's the amount per share. And then that's the total amount that was paid out to me. And then moving along to the investing profile here, some of you will notice that my margin is actually up that I use, and I'm going to tell you why. So my margin was about $42,900. I am running 0 date to expiration options myself. And so what I'm doing, I'm running a wheel strategy where I sell a cash secured put that's a little bit pretty far out of the money. And then I just keep doing that day in and day out. However, on Friday, I did get assigned. So the 580 strike got assigned to me, and I had this bumped it up by $58,000, but we're still in a very safe 32.88%. And then going to the margin investing here. So even though my total amount of margin used, my margin maintenance is actually in a very safe area. So my margin maintenance is $69,252.65. So what that means is my portfolio this equity would have to go down to $69,252 before I start getting margin called. Any lower than that, then the portfolio would start selling assets to make up for that amount. Those are the main metrics that I like to track on the Robinhood thing. And then now we're just going to head over to the spreadsheet here. So this is my AMZY tab. And so if you look here, the top left portion, so this last payment here, if you annualize that, it comes out to a 2.84% monthly yield off of the $30,000 that I invested, with a yearly yield of 34%, which is interesting because when you actually go on the Yield Max, it says it's a 50% yield. That's why you can't always distribution rate 52%. So that's why you can't always listen to what the fund says. You have to run your own numbers. Trust but verify. So it comes off, well, I guess that is the 52% is correct off of the share price in that exact moment. However, the share price fluctuates so much, and then especially when you get a distribution, like the share price drops pretty drastically. So I like to track it off my original investment. So if we got paid this much every single month off the original $30,000 I invested in, comes out to 34%, which gives us an estimated yearly income of $10,226.81. pretty good amount of money for not necessarily doing anything. And then here I just added a couple other things. Like I have a share count, 1,400 shares, market value, same as what Robinhood said. I like to have the original investment in there just so that I have like my own cost base, not necessarily cost bases, but you get the point. This is the total income paid out from the yield max stuff, the average share price, and then the performance. So if you take $30,000 minus the market value, gives you this performance. Now, a lot of people will say that is trash, and I'm going to be honest with you, it is trash. However, the whole point of this fund is there's no growth. You are getting compensated with income. Now, I have my thoughts on it after investing in like these yield max funds for the last 16-ish months, and that, you know, I would like to have some sort of performance that at least maintains, but I hope that, you know, I would want to invest in something that maintains a NAV value, but then also at the same time too, if you're getting paid out an income, you're going to pay some sort of taxes on that. Even the return of capital that they use, 91.48% is return of capital. So then I'm still going to pay 8.5% taxes on this income, even though I am setting aside that 30%, but I'm still going to pay 8.5% taxes on that. So is it really worth it to hold that? I don't know. That's why we're testing it out. But overall, right now, just from the net performance, so, you know, we're down this amount of money. But then if you take the amount of income minus performance, we're at positive $469.17, which gives us a yearly gain, or not a yearly gain, but an overall gain of 1.56% off of that $30,000. So this fund was made sometime in March. You know, tsly was the original OG fund. And I even updated that. So like even the tsly position, this is a brand new thing that I added that I didn't put in my last tsly distribution. But actually, if you look at the performance, like I'm up 14.16% overall on this position. Amzy, I'm only up 1.56% from the income. And then you can see here, like I made a little graph for y'all. Income's somewhat going up. But yeah, so again, you know, this is... technically, once the debt is paid down, it's free money. Every single dollar after the $30,000 is free. I never had to put my own money in. Would it be more worthwhile to say, if you knew the market was going to go up, just put your money in the S&P 500, borrow the $30,000, put in the S&P 500? Would you have gotten a 40% return? I'm sure that probably would be a better strategy, but I do like the idea of having this monthly income. And like I said, once this $30,000 is done, I might recycle another $30,000 position into probably XDTE. However, since now I'm running my own 0 day to expiration wheel strategy, as well as selling covered calls in my Tesla position, I really don't feel a need to put more money into these yield max or round hill funds right now. But once I get my margin amount decreased, it is a thought in the future where I will probably open up another $30,000 position, but that $30,000 position would probably be into something like XDTE or like JEPI, like the original OGs of income investing. But besides that, I hope you all have a great one. I'm going to do another shout out to my brother. His channel, his name is Project Premium Harvest. He does advanced borrowing strategies where he used a HELOC loan against one of his rental properties to invest in income funds. And then you can follow his journey on that channel. So the link is going to be in the description down there. Don't forget to check out his channel. And I hope you all have a good one. And hopefully this helps you out in building a stream of income for your family.